Okay, good morning. This is Mike and Corey today with topics that we're going to cover. I'm going to talk about a little bit of a market bounce that we're already seeing after yesterday's slight sell-off. And then I'm going to talk about the education department and the success of AI chatbots in the medical field. And Corey's going to dive into retirement and retirement success rates depending on when you take that. So looking forward to this, but before we get started, I must remind everyone this is a financial education presentation. You must do your own due diligence on anything that you hear. More disclaimer information can be found at ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So let me start off. I'm going to share my screen and show you the market's back in the green today. And of course, we got the dire headline, NASDAQ rises as benchmark rebounds from the worst day since 2022. And yesterday, we saw some sell-off, certainly in the NASDAQ and the tech. Semiconductors especially hit hard. Companies like NVIDIA and Marvell and Taiwan Semiconductor. But early today, we're already seeing the NASDAQ up higher than the S&P or the Dow. We'll see where that goes if that continues. Here's the thing. These are great companies. There was no fundamental change that happened yesterday that would make them not great companies yesterday. So you're just going to see some market movement. You could argue that some of those companies are very expensive right now, and that raising of the stock market is broadening out to the other 490 stocks in the S&P 500. So we'll see where that goes. A couple interesting articles I saw today that could impact us. So first is I saw this article about the education department to forgive 1.2 billion in student debt for 35,000 borrowers. And at a glance, when you think of an article like this, or you think of this, first of all, if I'm one of the 35,000 borrowers, yes, absolutely. If they'll forgive my debt, I'll take 10 grand, no problem. Love to have that taken off. As a kid, I got a kid with some student loans. He'd love to have it taken off. So from that perspective, I agree. Now let me give you the other perspective. Money isn't free. So the 1.2 billion, that's either printed dollars, which debase our currency, or that's government dollars that are spent from your tax revenue. So, you have to see that side of it. And then the other side is what causes inflation. That means there's not enough goods and too much money. So I'm not saying that every one of these students is going to take their money and just turn around and go out and buy something, but they are students and they are getting money. They might just turn around and buy something. These are the kind of things that can cause inflation or lead to it. Certainly, sadly, 1.2 billion is really a drop in the bucket. So that does not, significantly change. But this mindset, also, is that really fair for the students that went out and, worked hard and got a scholarship, joined the military to pay their student costs, or work a job to pay it? They don't get the benefit. It's only the people that took on debt. So, I'm not sure that really reinforces the best idea. Another article I saw that was fascinating, because all of us are, invested for this, AI. We love AI. There's so much benefit to it. And I saw this. How does AI do mimicking doctors? So maybe the doctors are, we'll start to see them apply for jobs because AI is taking their jobs. I don't think so. But it is an interesting concept. So there is an exam, and this kind of scared me. There's an exam, the U.S. medical licensing exam, the third and final installment, the most challenging. It requires the candidates to get 60% right. When I read this, I thought, oh my gosh, my doctor, they can get away with just getting 6 out of 10 answers right. It's like, I kind of want more confidence. They say the average passing score is 75%. I'm thinking, I want my doctor scoring like 95 or 100. But let's see how the AI bots did answering these questions. ChatGPT, 98% correct. So now if ChatGPT, which I subscribe to, if they can just analyze anytime I have something wrong, maybe I just go to them as my doctor. I don't know that they can write prescriptions. No, they can't. But it is interesting to see the variation. Claude 90%, all the way down to the AI called Hugging Chat from Llama, and I have not used that one. 66%, so that's more. Still would pass as a doctor, but certainly not near the success rate of ChatGPT. So, where's AI going next? We don't even know. But I did hear yesterday, I was on a conference call where Jamie Dimon from JP Morgan, CEO of JP Morgan Chase, said that he expects that, AI might solve cancer, might find the cure for cancer. And I heard that loud and clear. So there's exciting things there. And obviously, us at Ankerstar Wealth, we want to be owners of these companies that are doing this, because that's profitable for us for your long-term wealth. So with that, I will turn it over. Talking about long-term wealth, I'll turn it over to Corey, and he'll hit that side.
Thanks, Mike. Yeah, one of the conversations I've been having with people recently is around this dynamic of, hey, I've got some predictable pension payment, possibly Social Security, whatever it might be, and then I've got my nest egg. And how do I look at, what reasonable amount of money I can live on from that dynamic in retirement? So let's zoom in here to kind of a typical, there are some different time frames here, but let's zoom in on that 30-year retirement horizon. And we can look at, depending on how you're positioned, what success rate will you have in retirement? Success rate meaning your money lasts as long as you do. But what success rates do you have at some different withdrawal rates? So if you withdraw 3% a year, even if you are 100% bonds, you still have a high likelihood of success. What I tell clients that I'm talking to is, if you're withdrawing 3% a year, the expectation would be that we're actually going to continue growing your principal over time. Because you are withdrawing such a modest amount, you're not going to be eating all of your gains each year. At a 4% withdrawal rate across the spectrum of 100% stocks over here down to 100% bonds over here, you have a high likelihood of success. Let's now look a little more at this 50-50 or 75-25 sections as we go further down. At a 5% withdrawal rate, you do still have a high likelihood of success at that 25% bond, 75% stock level, but things are not as guaranteed. Now, what would I tell a client in this situation? You might need to be mindful that flexibility can dramatically increase the success rate. What that means is, if there is a down year in the market, maybe we try to hold that withdrawal to closer to 4% if possible, so that you can not eat your principal away during that down year. At a 6% withdrawal rate, you are kind of flipping a coin in some ways with whether or not that money will last as long as you would want. And then, of course, from there, things do become a little more risky. If somebody, hey, somebody could have tried to withdraw 10% and they would have made it if they had that 25% bond, 75% stock portfolio, but only under, one certain playthrough of that scenario. So just interesting to think about. 3% super safe, 4% very safe, and at 5% and above, we're going to need to be mindful and strategic to try to take a shot at that.
Yeah. And I think there's an important thing that he kind of calls out there is that 30-year horizon or a longer horizon. Sometimes when I talk to someone that's say in their early 60s, and I'll say, "What's your investing horizon?" and they think, "Oh, well, I'm going to get Social Security at 67 or 70 or whatever," and they think it's 5 years. But really, your investing horizon is the rest of your life. Of course, you have no idea that end date. The government has their actuarial tables, but it is longer than you think. So it's not just like I need to get Social Security and then that's it, and I'm set the rest of my life. I wish it was that easy, but certainly the right blend based on your risk assessment and what you can handle as far as market risk can assist you to last longer as far as the financial side. So thank you, Corey, and look forward to seeing all of you guys tomorrow. Bye.
Have a good one, Mike.